Accounting is often thought of as a complicated field reserved for financial experts, but at its core, it's really simple. It's the process of recording, summarizing, and understanding the financial transactions of a business or individual. Think of it as a way of telling a story about money. Every transaction, whether you're buying a cup of coffee or closing a big business deal, is part of this story. Accounting helps you keep track of all these details, so you know exactly where your money is coming from, where it's going, and what's left at the end of the day. It's like keeping a diary, but instead of daily thoughts, you're recording numbers. Accounting is essential because it gives you a clear picture of your financial health. Without it, you'd be navigating through life or running a business with no idea if you're actually making or losing money. Imagine trying to bake a cake without measuring ingredients. It's possible, but the results are unpredictable. Accounting helps you measure your financial performance, manage expenses, and plan for the future. Whether you're running a business or managing personal finances, understanding your income and expenses is crucial for making informed decisions. To understand accounting, there are a few basic terms you should know. Assets are what you own, like cash, property, or equipment. Liabilities are what you owe. Think loans, credit card balances, or unpaid bills. Equity is what's left over after subtracting liabilities from assets. These three elements make up the foundation of accounting and are connected by the simple equation: assets equals liabilities plus equity. This equation is like the backbone of accounting, ensuring that everything stays balanced. The accounting cycle might sound technical, but it's just a step-by-step process for keeping financial records organized. It starts with recording transactions, like every sale or expense, in a journal. Then, these transactions are categorized into a ledger, which organizes them into groups like income, expenses, or assets. After that, a trial balance is created to ensure everything adds up. Finally, financial statements are prepared to give a clear summary of the financial situation. Think of it like preparing a meal. You gather the ingredients, organize them, cook the dish, and then present it on a plate. Financial statements are the end result of the accounting process and provide a snapshot of financial health. The income statement shows your profits and losses over a specific period. It's like a scoreboard that tracks how well you've been playing the financial game. The balance sheet provides a snapshot of your assets, liabilities, and equity at a specific point in time, much like a selfie of your financial situation. Lastly, the cash flow statement tracks how money moves in and out, giving you a clear picture of liquidity. These statements help you understand your financial standing and make better decisions. The double entry system is one of the most important concepts in accounting, but don't let the name intimidate you. It's a simple way of keeping things balanced. For every transaction, there's a debit and a credit. For example, if you buy a laptop for $1,000, your equipment account, an asset, increases, while your cash account, another asset, decreases by the same amount. This system ensures that every transaction is recorded twice, once on the debit side and once on the credit side, so everything stays in harmony. When you're new to accounting, it's easy to make mistakes, but knowing what to watch out for can save you a lot of trouble. One common mistake is forgetting to record small transactions, like office supplies or snacks for the team. These small expenses can add up over time. Another pitfall is mixing personal and business finances. Always keep them separate to avoid confusion. Lastly, many beginners neglect to reconcile their records with bank statements, which can lead to discrepancies. Keeping a habit of regular checks can prevent these errors and keep your accounts accurate. In today's digital age, accounting doesn't have to be done manually. There are plenty of tools and software options to make your life easier. Platforms like QuickBooks, Xero, or Wave can automate tasks like recording transactions, generating reports, and even reminding you to pay bills. These tools are like having a personal assistant for your finances. They not only save time, but also reduce the chances of human error, making accounting much more manageable for beginners. If you're just starting with accounting, the best advice is to stay organized. Keep all your receipts, invoices, and financial records in one place, whether that's a folder, a spreadsheet, or a digital app. Make it a habit to review your records regularly. Once a week is ideal to ensure everything is up to date. And don't hesitate to ask for help if you're unsure about something. Whether it's consulting a professional accountant or watching tutorials online, there's no shame in seeking guidance. The more you practice, the more confident you'll become. And there you have it. Accounting basics made easy. Whether you're managing a small business or just trying to keep your personal finances in order, understanding these fundamentals can make a world of difference. Accounting might seem daunting at first, but with a little patience and practice, it can become second nature. So, start tracking your financial story today and take control of your money like a pro. If you found this guide helpful, make sure to subscribe for more simple and practical tips. See you next time.